I was only an accountant for 6 months before I quit. I do have the fancy degree that I could probably hang on the wall somewhere, but I don't even know where it is.
The Rookie podcast is actually one of my favorite podcasts in the BP.
I'm going to clip this and I'm going to add it to my Instagram and tag all the other hosts.
Not only do we pay federal and state income taxes, we also pay self-employment tax, and that's paying into Social Security, Medicare. So that could be an additional 15%. If you're someone who has other earned income, like a business, then we generally want to shift as many expenses as reasonably possible into that active business because we're saving an additional 15% tax. I'm Amanda Hahn. I'm a real estate investor and CPA, and today I'm joined by Ashley Kehr, the host of the Bigger Pockets Rookie podcast and a client and friend of mine. And we're going to talk to you about how you could be making thousands of dollars every year just by filing your taxes the right way. Thank you so much for joining me today, Ashley. How's it going?
You know, it's going good, but I am extremely nervous and I'm having a little anxiety from my days of actually being an accountant and how much I hated it. And here now I am back coming on to talk about it.
I just figured you're like the perfect person to kind of talk about your experience with taxes and also be an accountant as well. I wanted to know if you can just kind of, obviously I know a lot about all your deals and structures, but if you can share a little bit about your structure in your real estate deal and what are some of the things that maybe you have found challenging or very beneficial when it comes to taxes and being a real estate investor?
Yeah, sure. And I think first we should really clear the air and make it known that I was only an accountant for 6 months before I quit. And I do have the fancy degree that I could probably hang on the wall somewhere, but I don't even know where it is. But so not much experience there. But so I started real estate investing because I did not like being an accountant, and I was a property manager first, and I saw what this other investor was doing, and I saw the huge tax benefits he was having. I got to kind of manage his money in a sense and see how, you know, at the end of the year, you know, what his accountant would recommend and different things he would have to do to really not pay much taxes. And I thought, like, this is something that I want to do along with building wealth. I saw the wealth potential there too. So I started out buying small multifamily, little duplexes. At the time I was married and my husband had a dairy farm. And this was kind of the reason I was doing this was to build a safety net. For myself, I have several LLCs that are just long-term rentals. And the reason there's several of them is because I have different partners. So I have an LLC for each partner. And then I also have a media company that hosts my active income for podcasts and my books, different things like that. And then I have a property management company and a development company that does rehabs and different things like that.
Yeah, I love your story about kind of what got you interested in real estate, because I also have a very similar story where, you know, I was an accountant. I actually was a tax accountant for a big firm and working with real estate investors, and was really seeing kind of the power of all these people making a lot of money and paying very little to no taxes, where I was like, wow, I should really invest in real estate. And of course, like the passive income, that safety net. At the time when I started, my dad was really sick. He was like only in his 50s. He got really sick. And I was kind of like, wow, like
I'm sorry to hear that.
Yeah, like I needed another source of income.
For me, I did definitely learned a lot from being able to work as a property manager and building my own empire. But I also struggled because I had that limited mindset because I was only learning from one person and I wasn't kind of expanding my knowledge to Bigger Pockets. I think it was 4 years I was investing before I actually found Bigger Pockets. And I tripled my portfolio in that year after I found them. And I started learning about all kinds of different things.
Yeah. And then you became the host of the Rookie podcast, where you're teaching all the new investors. I don't want this to sound controversial, but the Rookie podcast is actually one of my favorite podcasts in the BP series.
I'm going to clip this and I'm going to add it to my Instagram and tag all the other hosts. I'm just kidding.
Oh no.
So thank you.
And I think the reason is because when we're talking about tax planning, it's so important for us to have a good foundation. And a good foundation, the best time to set up a good foundation is when you're starting out, right? Like you were saying, you have a couple different entities for different types of properties with partners. And we know a lot of rookies start out with partners because not everybody has unlimited money to do their own deals. And so there's specific ways that we set up entities when we have different partners. If you're starting out in the wrong type of entity, it could get very costly in terms of lost tax savings and also be very costly to try to unwind some of those. So I think it's really great that you're sharing all those things that you've learned over the years with all the new investors so that they don't have to make mistakes and have to clean that up in the future. I mean, our planning is only as good as the numbers that we have. So like if you made 50,000 versus 500,000, that's a huge difference in the kind of strategies we use to save taxes. And as, property owner too, like how can we make decisions on whether this property is performing or we need to cut expenses here if we don't actually know the numbers?
There's nothing better than just like a beautiful dashboard or a report that shows, your reconciled account, what your, profit and losses, what your cash count is, what your cash flow is. Nothing more beautiful. And my accountant that did my taxes used to praise me, be like, oh, you bring everything in, it's great. And I used to be so detailed and everything. And then it just everything got so busy that I just put that on the back burner. And it got to the point where one year I was like, oh my God, we have to go on extension. I'm not ready. And that was mortifying for me. I know it's not really that big of a deal, but for me, it was I was always the perfect client. I always had everything prepared. And now she's chasing me down for the information. And so that was kind of a huge awakening of okay, I need to outsource this. And for somebody who has no idea about bookkeeping, there's just so many great softwares out there too, like Stessa, which now integrates with biggerpockets.com. So if you're a pro member, you can have access to that. And Stessa is specifically made for rental properties or even short-term rentals you could use. But as a real estate investor, it just gives you the categories, the chart of accounts that you need. And it's not QuickBooks can get so overwhelming so fast, where for a new investor that really doesn't know a lot about bookkeeping, I really like Stessa for getting started in bookkeeping.
So I think a common misconception that people have is that if I've hired contractors and I didn't issue them a 1099, whether it's my fault or that they won't give me the form I need, that they think that they can't write off what they paid the contractor. So it's actually not true. If you paid a contractor, you can show proof of payment. They actually did the work for you. You can absolutely still take those as deductions. The only downside is that if you're audited, IRS might give you a warning or a little slap on the wrist to say, hey, why didn't issue this 1099 to someone, right? So, although, we want to make sure that we're diligent and we try to issue the 1099, it doesn't have any impact on your ability to write things off. And I'm sure, you and I probably both experienced this, before you hire someone and you ask them for a W-9, they're happy to give it to you. But if you're chasing them down, January a year later, it's that
actually just happened where we had a contractor that did a blacktop ceiling, and they have an LLC. We wrote the check to their LLC, and we wrote the check from a different, from an LLC. So it's LLC to LLC. And when my maintenance guy texted him, was like, hey, could I have your tax ID number? We sent a couple emails. We didn't hear back. And he's like, oh, I didn't know it was going to be 1099. And I just it's not like it was a cash deal or anything like that. And it just surprises me. And it was a couple days later, but they sent it right over. But still, it's just that they didn't think that was going to be 1099 for them.
Has there been any tax saving strategy that's consistently worked out well for you year after year that you're this year I'm going to do this again because it was like amazing?
That's a good question. Actually, one thing that we did was, so I also have a liquor store. I own the building that the liquor store is in. So one thing that we have done is we try to run more of the expenses through the active income per se than through the rental income. So for example, the liquor store pays as many expenses as it can, and that's written into the lease agreement where it's paying the insurance, almost like a triple net lease. It's paying the insurance, it's paying all repairs on the building, it's paying the utilities, it's, anything that we put into the lease agreement that's part of the rent, and we're trying to offset. And then also they're paying the rent to the building, so we're transferring some of the liquor store profit to the rental income. So that's one thing that we have done, is try to offset how we're getting taxed based on that.
Yeah, and I'll just add, just for our listeners who are like, why? Why are we doing this?
As far as this
Yeah, I got you. Okay. So the reason that happens is because active income, like a liquor store, is taxed differently than rental income. And so whenever we have active income, whether it's selling tequila or selling hamburgers or flipping real estate, not only do we pay federal and state income taxes, we also pay self-employment tax, and that's paying into Social Security, Medicare. So that could be an additional 15%. And so from a planning perspective, if you're someone who has other earned income, like a business, then we generally want to shift as many expenses as reasonably possible into that active business, because we're saving an additional 15% tax, right? So if you're paying a CPA to help you with tax planning, they're helping you with your liquor business and for your rental real estate, then ideally I want to try to pay for that with my business income from the liquor store, because I'm saving up to 15% more in taxes that way.
Yeah, I think that's what I said.
Exactly. That's exactly what you said. I love it. You're going to go back to doing accounting before we know it. How about depreciation? Obviously, for your rental properties, depreciation is a big one, as I would, assume with like most investors. Have you found depreciation to be pretty helpful in helping you to reduce taxes overall on like your rental income and just, other liquor store types of income?
Yeah, definitely. And actually where depreciation has had the biggest impact for us is on the farm. So the rental properties has definitely helped, but for farm equipment, one thing that we have done is at Section 179 where you write off the whole piece of farm equipment. Yeah. So we would do that. And what we would do is go and get a loan for the piece of equipment, and say it was $50,000. We'd get the loan, but we're not actually paying the $50,000 this year. We're just getting the loan for it, but we could write off the $50,000. So I'm pretty sure that my husband had been in the tractor store, December 22nd or something, based on what his taxes are going to look like, looking at what farm equipment to buy. But also one thing that we found very beneficial with depreciation is that after when we've gone to get loans, so when they look at our income, they will actually add back the depreciation. So say our profit from the farm was $100,000, but our depreciation that year was $30,000. They'll say, okay, your income was actually $130,000. And the same with the rental income, they'll do the same thing. So when we would go and get financing, it would really help with our debt to income and show that we, had a higher income to get approved for more loans for rental properties.
I think a lot of investors, most and many new investors don't know that depreciation is based on the purchase price of your real estate, of your furniture, of your farm equipment, right? And that just means that if we can leverage money from the bank, in your scenario, no money down, get a piece of furniture and we use equipment, and we'll use the same exact scenario to real estate. If I buy a real estate property with no money down, I get the same exact appreciation benefit as if I would have purchased it with all cash, right? A lot of investors think, oh, I put $30,000 down, and so that's what my depreciation is coming from. And it's actually based on the purchase price. And we have a lot of clients now even getting into like creative financing. They're buying subject to deals. And so even for transactions like that, us as the investor or property owner, we get the same depreciation benefits either way. We always get client questions like, how do you help someone save so much taxes, and still get a loan, right? I think that's always people's concern. Like, I wrote off way too much. I can't get a loan. And the beauty of it is if you're working with a savvy lender, they'll typically add back the loan. They'll add back the depreciation. So it's not hurting your borrowing ability at all. So last question, Ashley, what is your biggest piece of advice for other investors on, what they can do when it comes to tax planning?
I think the first step is to have a base knowledge, is have some understanding of what options are out there for you as far as tax planning. And I think if you are a new investor and you're trying to decide what strategy, is figuring out what the tax benefits are of each different strategy for short-term rental, long-term rental, flipping, wholesaling, what those tax consequences are for each of those strategies, and look at that, because I think that's something when someone's choosing a strategy that's often forgotten about as far as the tax planning part of it and how that will affect their current situation in life, is doing that, because you're looking at, oh, I love to design houses, I want to do a short-term rental, or this property came up, it's perfect to wholesale, I'm going to do wholesaling, and sometimes there's all these different things that come into play when you're choosing your strategy and not actually thinking about your taxes.
Yeah, for sure. And sometimes we work with new like brand new investors. The tax strategies often helps to determine what they invest into. Like, we'll have someone who, maybe is like very high W-2 income, just doing real estate as a side hustle, where they find out that short-term rentals is an amazing investment strategy to get massive tax savings on their W-2 income. Or alternatively, we might have a brand new investor who is lower income, right? Lower income meaning like $100,000 or less, where for them, maybe the long-term rentals or mid-term rentals is going to save them very significantly in taxes. So yeah, I love that tip. That is kind of a whole comprehensive thing. Like, what do you want to invest in? What do you like? And then also, what are the tax savings associated? So, well, thank you so much for your time, Ashley. I know everybody already knows who you are, but for those who don't, where is the best place to find you?
You can find me on Instagram at Wealth from Rentals. You can find me on the Real Estate Rookie podcast, and you can also find me on the Bigger Pockets bookstore, Real Estate Partnerships, and also Real Estate Rookie.
And I'm Amanda Hahn, and my firm is Keystone CPA. You can check out our website at keystonecpa.com. We got a tons of free downloadable resources. And if you're looking for daily tax tips, best place to find me is on Instagram as Amanda Hahn CPA. And if you found this video helpful, like and subscribe to the Bigger Pockets channel for more videos just like this one, or go to biggerpockets.com to check out all the amazing tools they have for new investors. And if you have any questions on taxes, drop them in the comments below.